Hey everyone, so in June of 23, I had made a video saying that the bull run has already started and we have seen how the stocks have performed after that. But now going into 2024, there are high chances that second half of 2024, we might see a big recession as well as drawdown in the stock market. So what are the reasons that are kind of pointing at a recession? So the first thing is the Fed is reducing its balance sheet. So usually when that happens, what is going to happen is the liquidity in the economy kinds of goes down. So that is going to hurt the economy eventually. Okay, it is not going to be instant. You are not going to see something like the liquidity going down and the economy starts to crumble immediately. It usually takes time, and now that the Fed has started reducing its balance sheet, that result should be out in after a few months. Okay, the same is happening in India as well. So the Indian central bank has been withdrawing the surplus liquidity in the system continuously, and also the rates have been pretty high. Now coming to the rates, so we will look at this particular thing. So whenever the Fed has pivoted, right? That is when it is increasing its interest rates and then change its stance to decreasing the interest rates. Usually, we kind of see a market rally, but that rally has always come after some kind of a correction in the market. Okay, so these are the few Fed pivots that have happened. So 2000, so when the Fed pivoted, it was because there was a huge run in the IT sector. There was crazy valuations in the IT sector. After that, the market saw almost 51% kind of correction, after which it again started to rally as the Fed decreased interest rates and increased liquidity. Okay, in 2007, the same subprime crisis happened, wherein the Fed kind of started cutting rates and then we saw a huge decline. So usually what happens, these are business cycles. So the business cycles, they kind of come to a standstill because of what has been happening, that is reduction in liquidity and increase in interest rates. The business cycle kind of continuously becomes smaller, and then finally breaks down. So in 2019, so it is quite debatable saying that COVID is something that was unseen and things like that, but high chances this was a man-made thing. And just after the Fed pivoted, there was a pretty decent crash in the market, wherein the big guys again came back in, put in more money because the liquidity was increasing and they had cheaper money available. So now, high chances that Fed is pivoting in 2024, maybe the first or the second quarter. And like I said, there is a high chances that in second half of 2024 we might see a recession coming in. So this is about reduction of liquidity by the Fed, and then the Fed kind of changing stance, and the most important one is the yield inversion. So whenever this has inverted, right, there has been a what you call a stock market crash within a year's time. Okay, so if you look at 1989 is when it happened, and in 1990 there was a recession. It happened in 2000, so we had a pretty bad recession there again. So it happened in 2007. We again had a recession in 2008 9. It happened here just in 2019 midway. 2020 we saw COVID. So now it has again happened in 2023, right? High chances that in 2024 June, that is 1 year from where the inversion happened, there is going to be some kind of a recession that is going to happen. So one more thing that is kind of making me a little skeptical on this rally is the kind of valuation we are seeing right now. Usually at the start of a bull market, we have very low valuation, and that kind of helps the stocks become 2x, 3x, 4x, 5x in the next 2 to 3 years. Now what has happened, most of the stocks are already trading, the good quality ones I'm talking about, not the kachra ones. So the good quality stocks are already trading at 40, 50, 60p, right? And there is very little room for disappointment. If the global economy cracks, like most of the big IT firms in the US are also kind of throwing out people as well. right? And the kind of rally that we have seen. So even if you look at something like the RSI, so whenever the RSI has gone above, or let's say reached something close to 80, there has been some kind of a correction. If it was followed by a very big rally, right? So like something like this happened here, and then we saw a correction. A big rally happened here, and then we saw a correction. So this was in 2018, right? Here again a big rally happened, and then a little correction, and then this huge rally. To be honest, this one you can take it as just one big rally that has happened from levels of 3,700 to 16, close to 16,000 now. So almost 4x it has gone down, gone up, right? In hardly like 4 years, or three and a half years, we have gone up 4x. Has the economy gone up 4x in the last 3 years? No, right? It has not even doubled, to be honest. So we were somewhere close to like 2.9, 2.8 trillion, and now probably we are around that 3.5, 3.7 trillion. So in that scenario, the stocks are extremely overvalued, something similar to what we saw in 2018. But is this going, I mean, are we going to see a bear market immediately? I don't think so, because what usually happens is there might be one blowout rally also, on the hope that, okay, now the Fed is kind of cutting rates and things like that. You might see a very big rally also, which can push these stocks to crazy valuations. And after that, if a correction comes in, usually those kind of corrections are price and time corrections, wherein the valuations get adjusted in, like, let's say 6 to 18 months. Valuations gets adjusted, and usually they are quite painful, because when you kind of push a 100 rupee thing to 500, the correction, when it comes back, it can even fall to like 200 as well, right? But one good thing is India looks more stable than the other economies. But since we live in a world of globalization, India is going to be affected due to that. And there is a high prediction that the dollar index is going to first come down to 90 when the markets rally, and then it is going to go to like 120. So even people are predicting that crude is going to go below $10 a barrel. Metals are going to struggle big time. That is in 2024, that I'm saying, after the second half. So although I was of this opinion that before the US election there would not be such a drastic thing, but to be honest, even the 2020 election, when the US went into election, right, just before that the COVID thing had happened, right? So looking at all this, I would be really cautious at this current moment, after making really good money in the last 9 months, wherein from March of 2023 we had a crazy rally wherein stocks have gone up even 2x or more, right? So looking at all these pointers, looks like there is going to be some kind of a slowdown. And one good thing is, people who were talking about 2023 recession have now stopped talking about that recession, although the chances of recession are now higher, because the Fed rates are at like crazy high value. The liquidity has gone down, so businesses are going to struggle in such an environment. Okay, so looking at all this, maybe the global economy is heading into a recession in 2024, and we might see some reasonable pullback in the indices globally. This is my take on what is going to happen in 24. But before that, one rally might happen. You don't know, maybe it might be 10% or even higher, but we don't know that. Though usually those are like the sucker rally, wherein all the new investors are kind of jumping in to make easy bucks, and they get caught in that. Okay, so hope this video helps, and maybe you can start cutting down your positions as the market rallies higher. Thank you.